And just like that, the Toronto real estate market is back. I mean, take a look at that median price appreciation in the month of September. And I'm kidding. I'm kidding. The market's not back, but it's anything but back. However, for those of you who follow the channel and know, I am not emotionally invested if the market's going up or down. I really don't care. All I care about is what is the data telling me so that I can advise my clients what to do based on seasonal trends. And this is particularly important because it's very easy to say the market's going to crash. And the market has technically crashed. In my opinion, a flat year in the Toronto real estate market is the equivalent of a crash. 23 was pretty much a flat year. That is a crash year. 24 is going to be pretty much the same, possibly even worse. But here why this is important. If you look at 16 to 17 to 18 years of data, typically, even in a down market, even when things are not looking good, in September, you will always get that pickup in price. You simply have a lot of nice homes will usually hold off and they'll list in September. And that is when you have a lot more buyers come back because they want those nicer homes. These are the serious buyers. This is where more transactions are going to start happening typically, and prices will kind of skew up. And guess what happened? This September, this exact same thing happened, even though we're trending down, and this is going to be a down market. This is going to be a soft market, and it's going to be a flat year. Prices still popped up in September. They're likely going to stay up in October, and then we're going to likely see another decline. There are some caveats here. Again, obviously, there's a bunch of changes, a bunch of policy that has changed within the government. We've had 3 rate cuts. Not that that's doing anything. I called it a while back. The rate cuts are not going to do anything at this point, and they haven't. But here's where the market is right now. Here's what you can expect for the following few months. We're going to work our way from good news to bad news. Typically, I like going for the bad news first and the good news later, but this is going to be mostly bad news. The world's not coming to an end, but the metrics are just not looking good right now. So I've always been concerned with absorption, which is the green line in this chart. So this is effectively showing us how many homes we're actually selling. So as you can see, we just sold under 5,000 homes in the month of September. Typically, we do 7,600. Now, this is compounding because 2023 was very similar, where we were selling a lot less than we typically do. And this trend does not want to break. We continue to be underperforming in this section, all while new listings are blowing up and we're getting a lot more new relists or properties that have not sold and they're coming back on the market. Now, here is an anecdotal way that I can tell you how to look at properties of what sells and what doesn't. This is based on a number of purchases and sales that I did in September. If it's a nice house in a nice neighborhood, you're going to sell at market. So for example, if that market value is $2 million, you're probably going to get in and around $2 million. If it's a nice house, nice neighborhood, good schools, etc. If you're a condo, even if you're a nice condo in a nice building, you're probably going to sell at market or maybe a tiny bit below. Okay, that's just the going rate. And then for anything else, you're taking a haircut. If it's a decent condo, decent unit, not so good area, then you're probably looking at a single-digit percent haircut to market. So for example, if it's a $500,000 condo, you're probably going to be selling in the 450 to 480 range right now. If it's a bad building, bad unit, forget about it. You're probably going to be taking at least a 10% haircut to market based on market values from even the summer. So condos, the haircuts are pretty decent. If you are an average house or a house that needs renovation in a good neighborhood, also single-digit percent haircut. You're not going to be selling at market value, not even close. If any work needs to be done, buyers are just going to move on. They're going to wait for the next thing. Not a desirable area and an okay house. This is where the struggle is the biggest. This is where things are selling for to the tune of below 10% below market. And this is usually not the case in real estate. Typically things don't go below 10%, but right now anything's on the table, especially if somebody's been listed for months on end, for 6 months, they haven't sold, they've been chasing the market down with price reductions. These are the ones where you're now going to be looking at double-digit haircuts to market value. Now, I'm going to give you some anecdotes for transparency that you can see how this is impacting me on my own deal so that you can understand kind of some numbers. I feel people understand this better. So let me give you profile number 1 of a purchase I did a couple of weeks back. We bought a condo for roughly, if I recall correctly, it was about $771 per square foot. Great boutique building, well managed. Somebody had sold a unit in the exact same building a couple of months back for $931 per square foot. So we effectively needs a little bit, it needs flooring and it needs like a countertop or something and some paint, but great. But then I had to sell a condo unit myself a week later, which I did. And, we sold it for what I believe would be, 20 to 30 grand below market value. Could we have gotten more? I believe so. but there were other units in the building that were for sale, and some of them were taking big haircuts. So the sellers in this case decided, you know what, I want the sure thing, I want to move on. Their cost basis for this condo, was bought in the 90s. They didn't care, they just wanted the money, and probably the smart move. So we've moved on. But again, I didn't get what I thought we would get. Now on the detached side, I can show you with some actual evidence to show you what's happening. So this is back to that point I was making. Good house, good area. Here's what's going to happen. So this particular client, solid client, they watch my videos all the time. They listened. We did everything as per the book. I told them, let's wait until September. Let's get this thing going. We'll do a textbook example, proper marketing, ton of advertising on Facebook, Instagram, targeted ads, WeChat groups, exactly catering to the demographic of people that would be buying this. And people right now are saying offer nights don't work, don't bother, blah, blah, blah. And guess what? We did an offer night. We sold, we had 5 offers. Then results fantastic. The open house was absolutely slammed. We had over 200,000 views on our paid targeted ads campaign. We had over 200 people actually come through the open house. And during our open house, my agent that was helping me on this particular open house, we couldn't even keep up with the amount of traffic that was coming in. While this open house was happening, I went and looked at other open houses in the area. Crickets. Nobody's there. You can't expect to have your listings packed with people if you're just going to sit there, put up on MLS, put up your for sale sign, put it on MLS, and then sit on your hands. It just doesn't work. You have to be doing outbound prospecting. You have to do paid targeted ads. You have to use a ton of other channels to get in front of the prospective buyers. And case in point, this is why we did really well on this listing. Still, I feel we should have sold for a little bit more, but once you're over this price point, you're splitting hairs. It doesn't matter. Take the sure thing. The profile of the buyer was fantastic, and they're going to close. So we just move on. And this is where the wheels fall apart completely. This is the elephant in the room, and we've talked about this in the past. Our active inventory, because of people holding on to old prices and not accepting reality and relisting and sitting on the market and becoming stale listings, just keeps adding to this problem, exacerbating it along with all the new listings that are coming on. So basically it's a compounding problem. So as you can see right now, we have over 25,000 listings, where typically we have less than 19,000 listings. And the 25,000 listings is going to continue growing into the future. And this is the concerning part. What's even more concerning that doesn't help this is in the prior graph, we showed that there are a lot less buyers right now, meaning we're absorbing maybe 60 to 65% of what we should be, meaning there are a lot less deals happening. And a lot of people will say and speculate that there just aren't any buyers, nobody wants to buy, and that is not true. There are a lot of buyers, there just aren't any buyers at current prices, meaning we have exhausted buyers that are willing to quote unquote overpay at these prices with these rates. If rates continue to materially come down, I'm sure buyers are going to come right back up, or prices and rates are going to have to come back down for buyers to jump in. The important thing to note in a situation like this is, as a seller, if you can hold off, you're probably better off holding off. And if you have to sell, this is the time to probably get serious about your price expectations and to understand the market. Will spring 2025 be better? Possibly. I don't know. I don't have a crystal ball. But as of right now, unless you're prepared to hold on, or you can hold on to your property for the long term, you might be better off doing that, because as it sits right now, you're not going to get the price you're expecting, especially if you've been sitting on the market for a long time. Buyers are just not having that. As always, I hope you found this video useful. If you have any questions, you can set up a call with me in my Calendly link below, and I'll see you in the next one.